Hello and welcome to the channel. In this week's video we will be discussing the e-commerce sector, but the question here is, after Kogan's profit update shocked the market last week, what is the outlook for e-commerce companies? So I've got a chart here which shows the performance since 2018 of, this is Kogan, Temple & Webster, Redbubble. So it saw for the most part steady appreciation. Then we come to 2020, and I should say Temple & Webster here, which is a stock I've owned in the past, started to break away from the group as the high quality performer that it has become. Then of course the pandemic hit, everything sold off, despite what we now know was a very good time for e-commerce companies as people shifted from buying in bricks and mortar shops to buying almost exclusively online as they were stuck at home because of stay-at-home mandates. And then we got to this incredible period where sales growth and customer number growth just absolutely skyrocketed until here, and at this point started to get to a point, well, as I should say, this is around when successful vaccines were announced. That was actually November, but there was a little bit of a wobble already. But the market started to say, well, obviously we've seen customer numbers and sales growth absolutely go through the roof during this period of the pandemic. Speculation is that these trends that have been already coming have just been accelerated. Can this be sustained ongoing? And for the most part, I think that was naive. The shopping experience is not always just about satisfying the need for what you're buying, but rather there's an experience there that people, I think, value. People are social creatures. Shopping centers have been popular for so many years for reasons, not just because everything's there and convenient to buy, but people like to get out. They like to go to food courts. They like to go to the movies. They like to go to the gyms. It's a whole experience that meant that people were not just going to stay at home forever. And now we've come to this point where we're starting to see the names sell off quite dramatically as market updates have disappointed. And I'm going to show you exactly why. This is the business update they've talked about. Now, what they've talked about, and I like a few of the words they've used, is material demurrage is a real euphemism for costs, I think basically they should say. But effectively what the whole gist of this, and I'll leave this screen up so you can read it if you want to, has said is that Kogan, as a victim of its own success and perhaps hubris, has decided that, as many speculators have claimed, this demand for e-commerce has just accelerated, and the customers that they've grabbed and are now part of the Kogan family are going to continue their shopping habits just as they did in the middle of the pandemic. And obviously, as a business that needs to feed that increased demand by buying ever-increasing levels of stock, that is a challenge that needs to be managed both with new warehouses, as they've shown, and also with stock. And I should say that stock is not just sitting on a shelf as valuable in 2 years as it is today, but rather it's things like technology, which gets outdated very quickly. So what we've seen is, as increasing levels of inventory have been needed, they've spent that money, got it into warehouses, and now we're now starting to see demand for that product start to wane pretty aggressively. And now we're looking at the awful period where write-downs of stock are pretty likely. Increased discounting to dispose of that aging stock is both likely and occurring, and obviously marketing spends are increasing to clear that stock, all of which of course is going to crunch margins and see profits deteriorate pretty rapidly. So this $58 to $63 million profit was down from I think a little bit above $70 million, and it's not the first time they've disappointed as well. So the stock, which hit a high I think of $24 at one point, is all the way back down at $9.50 or $10. And despite the fact this was this is I think only a $5 or $6 stock pre-COVID, and undoubtedly, a higher quality business with a far higher customer base. There's no doubt that the near-term profitability of this business and others is at risk. And I think you're also seeing the big difference here between a Kogan and a Temple & Webster. One of the beautiful things about the Temple & Webster model, of course, is that it's effectively their business model is one of consignment. So they don't own the stock, they don't hold it in a warehouse, but rather they effectively act as a marketplace in a way, which isn't too dissimilar to Redbubble, I should also say. But Redbubble was, I think, probably a little bit too expensive, hence the sell-off. But that's the reason I think Temple & Webster has held up better. But who knows, it too can possibly disappoint in the near term, and I think that's the risk for all of them. But certainly the names like Kogan, I think have downside risk in the near term, despite the fact they've really disappointed with the last few updates. But I think the risk is that people return to their old ways of life, which certainly the early evidence suggests that that's going to be the case, and they continue to disappoint. Anyway, that is it for this week's video. Thanks for tuning in. If you liked the video, please click like and subscribe, and I'll be back next week with a new video.